to the closing table. I'm Katrina Flukas, Senior Loan Officer with Safe Trust Mortgage. Welcome back. I'm excited that you came because this segment, we are going to talk about the main thing. You know how you always say, keep the main thing the main thing? We are talking about the main thing, and that's before we do anything, before we start looking at houses, before we get up to applying, we need to figure out what the credit looks like. And I have my friend, my business partner, someone who has supported me personally and my growth and development with my business credit and all things, none other than Tye Burton, financial coach and AKA the credit queen of the South. Hey girl.
Hello.
Welcome to the closing table.
Well, thank you for having me.
Yes, I'm glad you pulled up a seat.
Always.
Yes, ma'am. Yes, ma'am. So we got to give them some backdrop because we've been doing this together for a minute. Since I started in loans with my first brokerage, my broker introduced me to you and I never turned back. It's so funny because people say, well, you need to have more than one person. No, I need to have a person that knows what it is and that knows how to do it. So I appreciate you and I applaud you in everything that you are doing.
Likewise, I feel the same. The relationship has been very genuine and it's growing, and I love to see us win.
Come on now. Come on now. I mean, we started doing home buyer seminars when it was just a few people to just growing and staying consistent. And when I didn't know what it was going to be, you spoke life into me as it relates to my growth. So I appreciate that. Sometimes people see you on the outside and they think, oh, well, because they show up a way, everything is perfect, and it's not. And I'm glad that I can let it all down and I can always be me with you. I appreciate that.
Absolutely. Because you have to remember, you cannot see yourself 360. Ooh. But the people around you can.
I got you, because I can't see what's back here. Ooh, I don't know if I want to see all of it, but I appreciate
It's a beautiful sight. That's all I have to say.
Thank you, sis. So listen, we want to talk this morning, or today, this morning, this afternoon. We don't know when you're looking at it, but we know when we're here. We want to talk about just credit, period, and where we start, because so many people run from it. Yes. We know we have it, and I'll just have to say, when I was in college, that's when I first realized or heard somebody talk about credit. Growing up, I did not hear anybody in my home, and I grew up in what I say is community home with my grandmother, my grandfather, my uncles, cousins. Nobody talked about credit, but when I got to Miami-Dade Community College and I was on the set and we're sitting out there and I saw the Visa people and they had their table and they had all these gifts and cups and things and bags, and they're like, if you apply for this Visa card, you can get this. And I was like, I can't. And they were like, you can do it. You have good credit. And I was like, credit? What is that?
Right.
But I filled that little paper out and got the thing, and I got the credit card, and I went to swiping. And then the bill came, and I was confused.
Yes.
So it's like, for me, I'm like, I never wanted my son, my nieces, nephews, for that somebody outside in the world saying, hey, you can have these things, and not realize what the consequences are behind it. So when you're seeing people, especially because I feel like we have an obligation to our community to be able to do what we're doing, and that's always sharing, that's always educating, even when they may not want to hear it. But if you were talking to a person that was getting ready to buy a house, what's the first question you usually ask them?
I ask them, how's their credit?
And what do 99% of them say?
Most of them say, I don't know.
Yeah.
To be honest, a lot of people say, I don't know. I haven't looked at my credit in XYZ, or it's bad. You know.
Yeah. You either get or that. Yeah, that's typically.
Very rare I hear, oh, I'm good. You know, so.
Because when you hear somebody say, I'm good, or I have a XYZ, you know that's a person who is knowledgeable, who's done their homework and their research. But you're right. Most of them will say, it's bad, but I'm in a rush to buy a home tomorrow. Even though I have a 500 credit score, I'm ready, but I also don't have money either to put down. So the two don't go hand in hand, because we know if you have a 500 and you're willing to put 10% down, we can make something shake and get you in there. But if you have a 500 and you're looking for down payment assistance, that's not going to happen.
Right.
So in today's market with your clients today, most people, what's bringing their credit scores down?
Their habits, to be honest. And uh, if anyone has bad credit, I always tell them don't beat themselves up because
Okay.
it's a lot of miscommunication that's out here. You know, a lot of people don't look at their credit until they want something.
Mm-hmm.
They don't understand it's like your body. You have to feed it. You have to pay attention to it. So I tell anyone, if you have bad credit, it's okay. That's temporary now that you're looking at it.
I love it. You know, when we were first talking about clients, you and I, of course, I had a good credit score when I came to you, but when I first bought my first house, I didn't, and that's why I couldn't buy it. It took me a year. I had to move back in with my uncles to build up my credit, and somebody helped me, but I still didn't understand what I was doing and how it was actually helping me because I saved money and I had to pay some things off. And it's so unfortunate that a lot of people don't know. We're going through processes and people are helping us with things and we don't know. And that's good and bad because every credit counselor, every credit coach isn't, they're just not people of integrity like yourself. Right. Some people will tell me, well, Katrina, I've tried and I pay something every month and my credit never changed and I don't know what there is to expect. Right. So what do you say to those clients? What is your process when you first get them? I'm coming to you. I need help. What do I do?
So I'm real big on education. If you don't understand what you're reading, no matter what someone tells you, you wouldn't know how to apply the knowledge. So that is my biggest thing. I need to see where your knowledge is when a credit report is in front of you. Okay. Then I identify what is exactly based on what you're trying to get. Because a lot of people don't understand different things on your credit does not affect certain things you're applying for. There's different things that lenders look, well, I wouldn't say lenders, the credit algorithm. Okay. People don't understand there's an algorithm. So if you're applying for anything that's like loan based, lenders are really going to look at your payment history more so your credit card usage. And that's why you see a variance of points when you're trying to apply for a car, a home, a credit card. So first things first, what is your goal? What are you trying to repair your credit for? That way we can identify the things that it will be screaming at a lender based off what you're trying to do. Does that make sense?
That makes perfect sense because, before, and I was alone, full transparency, I was a loan officer at the time, or new loan officer when you and I met. I didn't realize the number of different credit reports. Yeah. And that was a educating point for me. And, using my FICO.com to be able to, because people will say, oh, Katrina, I have a 670. And I'm like, where did you look at that? Oh, Experian or Capital One, all of that. And I feel so good in this space when I'm like, well, did you know when you're buying a home that there is a mortgage credit report? If you're buying a car, there's an automobile, and actually there's a couple of them. Yes. So it's different things, different credit requires you to look at different reports. And I'm like, if I learned it at my big age, what am I, 51 now? So if I learned it in my 40s, I know other people don't know. But when you educate them, like I can say, because thanks to my sister, I'm in the 800 club, so I can say, hey, if I was buying a car, I'm like at 850, we good. We can walk out. We getting whatever they said, the .99, whatever it is, we got that. We're getting there and we can walk in.
You set the terms.
Yeah, that's right. And you can do that when you know what you know.
Exactly.
But if I'm buying a house, I'm like, it's 796. They were like, why? Because that algorithm is very different.
Very, very
And people don't understand that. Can you expound upon that a little bit for us?
So, for example, when I sit down with a client, I see where the disconnect is. Okay. It could be a lack of credit, because everybody has to understand.
What you mean a lack of credit?
So, let me get to that.
Okay.
Everybody's credit profile has a different DNA. Okay. That's what I tell people. We can be sitting next to each other, have the same accounts, but based on when I opened up my accounts, those same accounts, based on when I made the payments on those same accounts, my credit will be different than your credit. So you can't just look at the score. The score is a snapshot
Okay.
but you have to look behind the score.
Mm.
Okay, so if you, for instance, I had clients that had 700 credit scores but couldn't get funded, but I was able to get someone with a 660 credit score funded. Why? Because they have the age on their credit. They have multiple accounts. It's showing the bank that they can handle revolving and installment. So you have to look behind the score. Behind the score is going to let the lender know what they're signing up for if they give you funds.
That's right. I like it. And you know, again, I tell people, they're like, I don't understand. I got $50,000 in the bank, but you were just late on your last 4 mortgage payment. Well, the house is paid off now, but they're looking at that because it just doesn't make sense. And you try to help them understand, but a lot of times it's just that disconnect with people that you're serving who are going through your program. Are you, how often do you check in with them? How often are they getting updates? And what do you see as your main source of your main people who really lock in? Because everybody that's referred doesn't lock in.
Exactly. So the first thing is making sure, what is your preferred method? Because I am an email queen. Documentation needs no conversation. Like, it's date stamp. You know, people can change their cell phone numbers all the time, but most people keep their email. So that's my point of contact that I prefer. But I do like to touch bases with people every 30 to 45 days because anytime that you are challenging something on your credit, by law, the bureaus have that time frame to make any updates. So at that time, we're just guessing. So I usually reach out when I see it in black and white. This is what we see, you know. And people have to understand, they have to know what they're disputing. You can't use a generic template. You can't do those things, especially with AI. You have to get past AI, you know, for your disputes to be taken serious. So it's a lot of things that you have to sit down with them. But the key thing that I notice with my clients, I have to remove the emotional part. You know, they have to understand when it comes to the banks, they can care less what you went through. They want to know how you handle life events. So if one life event knocks you off the map, why do they have to justify? You know, and I have to let people understand, when you remove that emotion, or I switch the tables. I say, well, what if someone owes you 6 figures and they was late? How would you feel? Or you don't know them from a can of paint. You just met Tye. Let me get $100. So you can't get mad when the lenders are asking for certain documentation because they want to make sure that they're going to get their money back. So when I remove the emotion, the light bulb goes off. You're right. You're right. I need to get it together.
What's the biggest misconception that you see people having about their credit?
Well, just looking at a score. That's the thing.
Yeah.
The other thing is not only looking at your credit when you want something.
That's true.
You have to really take it seriously. I tell people, when you want great credit, you can't be, I call it grown. You can't say when you want to do something. If you agree to make those payments when you sign that document, stick to what you say. Don't get mad if you have backlash, late payments. Late payment is worse than a bankruptcy with scores. It drops your scores 50 to 100 points. People have to understand that type of behavior is the reason their score looks the way it looks. So that's the thing. A lot of people think because they have money in the bank that is going to get them through the door. That's not true.
Why do you think people avoid looking at their credit?
It's a reality check. It's a reminder of things that happen or being irresponsible. Most people who have bad credit have money.
Facts.
So that's what I see. Most people who have bad credit have money, and they want to dictate when they want to pay somebody back. They want to enjoy the fruits but they don't want to put in that work of paying back. So that's why I say you can't be grown when it comes to credit.
So I'm gonna pivot a little bit because we're gonna go back to our home buyers.
Mm-hmm.
I want to talk just a little bit about the importance of my personal credit when it comes to business credit because
Okay.
I didn't realize it until
Yes.
I was in the space. Thank God, we were in a good space to do so.
Mm-hmm.
But how does for the people in the back, how does their personal credit impact when they're trying to open in these businesses, getting SBA
Oh my
loans and
gosh.
the whole of the things, and what's happening when you finish that segment into what's happening now with all of those loans that came after COVID and what we seeing now, because it's like a nightmare.
How much time we got? Okay. So first most, I tell people, yes, the internet is a great source for information. However, it's a drop of the bucket of what you need to know.
Right.
So if you are starting a business, your personal credit, they're going to ask you for a PG. Okay. I don't care how many net 30s you put on there. Net 30s are not financial trade. It's not telling banks how you handle money. So it's the 3 C's. You have credit, you have cash flow, then you have collateral.
Okay.
When your credit is not high, they want you to have exceptional credit because they're taking all the risk.
Correct.
If you don't have exceptional credit, they want to see, is your business producing income? Do you have clients? If you don't have enough, nowadays, most funding like for you to have $20K a month to look like a stable business. So if you don't have that, what's next? What's next on your portfolio? Collateral. Do you have real estate? Do you have 401K? Do you have something that we know that if everything else failed, because you're brand new as a business owner, that we'll get our money back? So that's why they have to remember the 3 C's. So if you don't have collateral, if you don't have cash flow, you need to show you know how to manage your money. And that's what the credit speaks to lenders.
What happened after COVID?
Ooh, child. I would say for me, COVID was a blessing and a curse.
Okay, that's fair.
It was a blessing for true business owners who know the ups and downs of cash flow. It was a curse for people who was not used to that type of money. Okay?
Okay.
So instead of investing their money into things that'll make more money, they spent it on things that didn't make their business money. Okay? Not only that, they didn't know that a UCC was being put on their business. So that's showing every lender you got this huge debt on your business, but you asking for more money. So you got this amount of money, not even 2-3 years ago, and you have a business and you still need more money for debt consolidation. That's a red flag. So that's why funding has tightened up, because a lot of banks lost as well with these loans. So that's why it's not as easy as it used to be to get funding. Now they're all up in your business to make sure you're legit.
So we have to make sure our personal is good. We have to make sure when we're borrowing or getting ourselves situated on the business end that we're ready as well.
Yes.
You're getting ready, or we're getting ready to do a event soon.
Yes.
Tell me a little bit about the premise behind just getting it together and who the target is, because it's not for first-time home buyers.
No,
this is not that space.
No. So this is more for individuals who's ready to tap into real estate investing, purchasing real estate for income producing.
That's right.
And at this seminar, we're going to go over the right way you should, for one, structure your LLC, S Corp, however you may want to have your business, because it's a difference now. You're not doing it personal. This is business. So when you start investing, they want to see what business is making this purchase. We're also going to go over what is required, especially when you're first time, Because if you don't have but so many projects up under your business, lenders are going to be like, okay, yeah, you have great credit, but you have no experience in what you're trying to get money for. So we're going to tell you what lenders are looking for and the reason why they're requiring XYZ as a down payment. And we're also going to be educating you on how to see what your return will look like. And that will help business owners determine which route do they want to do.
That's right.
Short term or long term.
Yeah, the buy and hold, or am I fixing and flipping,
Yes.
and understanding that regardless of what I'm putting the 20% down, but my credit score will impact the rate that I get. And different markets are buy and hold markets. Other markets are I'm going to get that money right now. Like, for example, we have properties here in Atlanta and in Detroit. Detroit looks very different. It was a low buy, but rental income really good. So, that'll be a property that we hold it. We're not looking to necessarily flip it. But I will say that when people are coming to me and they're talking about that DSCR loan and getting funding and making sure they want to put it in their LLC, all of that you can do. But like you say, you're the personal guarantor. We're looking at your stuff first, and we're looking to see if you have assets. Correct. So it's your credit, and do you have the money to buy what you said you want to buy? Can you put 20% down? Because there's no negotiating. Correct. We're not negotiating that. This is what it is. Fix and flip, a different animal. Of course, we have to have our general contractor. We have to look at what it's going to take. We have to know the after retail value, all of the things, because TikTok doesn't tell us all of that.
Exactly. And I'm removing all the fluff.
Appreciate it.
I want you to know exactly what I went through, so that when you start the project, you're ready. You're ready for that beast, because it's a beast that comes along with it. That part.
Managing people, managing entities that you're not accustomed to. I know one of the segments we had Erin Glenn with Integrity Title on, and she was talking about the one-time closed loan that we have, which can be used for an investment property or a primary purchase. But with that, you manage the general contractor, you manage the people. The lender oversees it, but you only have 11 months. If you're building, from the time that loan closes to 11 months, that house has to be up, and then you're identifying what are you going to do next. But that's it. It has to be. And if you have shortages on this, that, or the other thing, you have to identify, am I ready to manage it? Because nobody's doing it for you. Or if you hire a property manager, a project manager, you better hire well to make sure that you don't find yourself in a negative situation and you're trying to figure it out on your first investment property.
Because people see the A, but they see A and Z. And once they get past A, they have to find out all the other moving parts. And that's one thing I am just determined to help people with. And the good thing about this seminar is that we're going to also have you there for people who don't have a large amount in reserve. We can find out different avenues. People don't understand who own homes. They don't understand they have equity in those homes.
They do.
People don't understand they have, they can use their 401k. Things of that nature. And the difference between me and others, to me, I see it's no competition. But I like to help people get started and come up with a plan on how they're going to pay that funding back and still make money. It's not about, get this, and then you're done. We can need to have a whole plan to go ahead, start to finish, and then now it's the fruits of your labor.
Facts, big facts, big facts. So I'm excited. That is April 18th, right?
That's correct.
April 18th. So I'm excited about that. What's our location?
It's going to be at Tye Style, the Atlanta Home Experts, in Snellville, Georgia. Okay, so that's good stuff. Good stuff. So we're going to have something for everybody. So this is not just for first-time home buyers. We're talking about, in this segment, we're talking about credit as it relates to the beginning, investment, pulling money out. You just heard my sister say, hey, you can pull money out of your 401k or your 403b. You can pull equity out of your home to purchase your next home. A lot of people are literally sitting on money and saying, I don't have anything. I don't know how to move.
And, you know, sometimes we're sitting and I had a sermon one time and it's in your house. It's already in your house. So you may have it. You're just not thinking that way. And not because it's a bad thing, but because that 360 degree, having somebody else to say, hey, what about this? I see that. So I'm excited about April 18th.
You have to give it an example that we did.
Which one?
How could she forget? We took one family
the
who
three.
did not have any money in reserve. They did not know they had equity in the house that was paid for. So Katrina helped them pull money out of the equity, and they used that as a down payment on their forever home. Then after that, Tye sold that home that they pulled the equity out, and they still came out
with more money.
With more money.
More than they thought they had.
At the beginning, they thought they didn't have any chance.
If you're a homeowner, you have equity. You have something. If you've been working on a job for 20 years and you're putting money into a 403b or 401k, you can pull from it. It's nothing like borrowing from yourself. It's nothing like leveraging your resources and your assets. So don't listen to everything that's out in the world. Talk to an expert. That's why on this platform, I want to make sure that we have authentic and organic conversations so you can see exactly what the real is. I'm not saying, oh, it's going to work perfect, because as Tye just mentioned, we're sitting next to each other. We can open up the same credit cards at the same time, and I can pay mine 5 days after the due date, and she pays hers 5 days before the due date. There are going to be different impacts because of that behavior. So we have to get in the room. Don't be afraid. Pull up a seat, because some of what's going on is fear versus lack of information. We're scared to go in because we've made bad mistakes. When I bought my first home, I believe my credit score was like a 620. But that's not a lane or vein that I'm in anymore. Did it take time? Because that's the other component. Credit takes time.
Yes.
Because it's about behaviors. It's about habits, as you say, and seeing. So we can't just be in a rush to get into a thing. And when we're in a rush, it's like, okay, now I got this rate that's XYZ or these terms that's not favorable. But that's why, Tye, my next question is, if somebody is looking and they're ready to buy in the next 3 to 6 months, what should they be focusing on right now as it relates to credit?
They really need to be pulling their MyFICO. MyFICO.com, Premier subscription. That $39.95 is the best investment that you can do. I don't understand why people don't do it, because you have to understand you get what you pay for. So that's why you're not seeing accurate scores with free or banking credit models. After that, you need to identify what's in red. With MyFICO, it's going to put it in your face. It's like, here you go. This is what's screaming at the lender. Now, once you look at your MyFICO and it makes you move back, that means we need to work on some things. Because guess what? When somebody else look at your credit, they're going to move back too. Like, whoa. Right. So you want to make sure that you are addressing the things that is making you not look so good on paper. You know, I'm old school. I tell people all the time, we always worrying about what our mom, dad, sister, cousin, neighbor saying about us. But we need to be knowing what the credit bureaus are saying about us, because you never know when you might need to walk into that bank and ask for some money. So we need to clean that up. And it can move faster than what you think it is, but you have to address the issues first.
The right things too. Because what about the stuff that, you know, sometimes I'll get people who come to me. And our process, just so you all are aware, typically you're coming to the lender, we're going through, I'll do a credit pull and we'll see where you are and what you need to do. And then I'm referring you to Tye. So a lot of times when a person comes to me, they're like, oh, I've been working on this or I've been working on that. And I'm like, it's not moving. They're like, well, what if I do this and I do that? And I just stop.
No.
I'm going to refer you to the credit specialist, to the expert. Or my question to them is, so what did she say? Oh, well, there's not a shortcut. There is not. Because it's, oh, I could do this. Or somebody told me they can wipe this out and I don't have, and I'm like.
Oh, I hate when people, Oh, don't get me started. Because for one, I'm probably the only person you'll ever meet who gets excited about credit. Credit changed my life. It it's the most important thing besides oxygen, to be honest, in this world, because that's what's being pulled, even for car insurance,
That's
things
right.
of that
Facts.
nature. Your credit is being used for everything. But just disputing things is the reason why you don't see movement. You should not, just for example, you should not be disputing things that's like over 4 years old. Those things don't have the biggest impact to your score. Well, you hear that song, What Have You Done For Me Lately? The lenders are wanting to see what you've been doing lately.
That's
So in
right.
24 months, what's been reported negatively within
Mm-hmm.
24 months? If you get the most recent late payment off your credit, that's an average of 30 to 50 points versus you getting a collection that was 3+ years old
Mm-hmm.
off your credit. A lot of times your credit won't move. You look better with debt to income,
Right. Right. Facts.
but it don't move them scores. So you
Mm.
have to know which lane you need to be addressing. So you need to really speak to a credit specialist. I hate the word credit repair
Mm-hmm.
because in credit repair world, they can care less what your score is.
Mm.
If one thing is removed off your credit, they did their job. Hint, 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 clue, clue, clue. So when a lot of people say, "Oh, well, I paid this person and I saw some things come
Mm-mm.
off," but if someone who you're talking to about your credit is not telling you what you need to be doing, run, because your credit score is based off. Everyone has 100% power of their score. Period. So address the right items. With mortgages, you need to clean up your late payments, your most
Mm.
recent late payments. With mortgages, they look at your monthly debt, not your
Mm-hmm.
overall debt.
That's
So
right.
you have to understand which accounts do you need to be paying off, because you may need to pay off accounts to make your debt to income look
Mm-hmm.
better, or it may be for your score. You need to see the big picture.
That's true. So if I am a buyer right now and I'm referred to you,
Mm-hmm.
what is a ready, willing, and able person that's coming for your services? What is my mindset? Because I'm already scared because
Mm-hmm.
Katrina has told me
Mm-hmm.
I can't, and Katrina has teed me up and said it's delayed, not denied.
Mm-hmm.
This is because you see the email how I try to make it really nice, and but what do they need to have in their mindset? Like how do they need to come postured for your services?
For one, they need to be willing and open to
Mm.
take advice and be ready to apply. Your credit is an investment. It's not a quick fix. It's not hitting a lick. It's not none of those things. It's about fixing your habits. So if you're not ready to adjust how you handle
Mm.
things, then you're going to be repeating the same patterns and be in the same situation. So anyone who understands that their credit is an investment and their credit is not just based on you paying someone to get something removed, it's based off how they're handling their finances. That's the mindset that people get to the closing table with.
No, that's right.
Hmm.
Whew, girl, listen,
I
you
know we
said
go through a lot. People don't see the
whew,
behind the
they
scenes of what
don't.
we go through. We wear a smile very well, but
Listen, it's a lot of in the background trying to have those conversations, trying to guide people,
yes,
trying to almost convince them of what's right for them and showing them, but they're not ready, and we have to almost drag them to get to the ready because I'm not dragging anybody to the
correct,
closing table. I will
correct.
drag you and help you get ready, but I need your mindset to be right because I want you to pay your mortgage.
Exactly. We want you to
Listen.
be the. We don't want anyone to go in foreclosure
No.
or fall behind. I
Mm-mm.
also look at people's finances. I You said we can be transparent here.
Extremely.
In my field, I have noticed the people who refer people to me are
Mm-hmm.
misguiding their clients, or they're counting their clients as income for them. So
say it again.
You
Come on
cannot
now.
rush someone. This is
Mm-mm.
a big investment. So if someone is already living check to check, don't be trying to pressure them.
Yeah.
So with people who's living check to check, I say forget about your credit. Let's see what's going on with the money. Let's see how we can eliminate some debt. Let's get that under control. Once we get that under control, we can work on the credit. And guess what? If we're getting that under control, your credit gonna go up.
Yeah.
So it's about making the right realistic goals and listen to someone who's actually working with lenders and don't feel pressure from someone else. In your mind, I tell anyone, do you feel like this is the right time? Because I get a lot of different conversations than what they tell their real estate
Absolutely.
agent and things of
Absolutely.
that nature. I get the raw,
Absolutely.
so a lot of people feel pressured or they're listening to people who say you don't have to put no money down or
I just want to run out the door when I hear
exactly.
that. Like,
And some people get upset because Tye said, well, you have earnest money, you have to do your inspection, you have to do
appraisal.
your appraisal, and also the lender may want to see if you have a couple months of the mortgage in your account. Tye, why
Reserves.
you say that? Oh, I'm sorry.
Because you can't buy a house and be broke.
Right.
Sir, ma'am, no, that's not what we're doing.
Exactly. So I mean, that's why it's like, okay, don't send anyone to me if you don't want me to be transparent with them, because I'm all about leveling up and not putting someone in a worse
That's
situation.
Right. That's right. I love that. My 3 pillars: honesty, access, and knowledge, because I want people to know.
Yes.
Because when I first bought, I did not know, and I need my clients on the loan end. It's a little different. If you don't pay, then I have to pay back. I don't want to pay. I want you to do well. I want you to be in your house. I want you to be thriving, and I don't want you to go in and you got your house, but you're broke. You haven't truly planned for it because somebody said you can get it with $100 down, and that's just nowhere. You're not reading the fine print. As Tye just spoke to, the appraisal, the earnest money, the inspection, because you need to get an inspection and make sure your house is good, and then the reserves. So after all of the things, even if the seller pays 3% in closing costs or more, or you got down payment assistance, you got all of the things, there's still some extra that's going to be left. And then the lender is going to say, especially if you have a lower end score, where's your 2 to 3 months of reserves?
Correct.
That payment, where is that money? 401k, we can use that as a reserve. You can have gifts, you can have the things, but if you're doing all the things and you're pulling and you're just barely, now in 2 months, it's time to pay a mortgage. So are we ready? And that's what you get, when anybody that will be on the closing table, you're going to get people who care about you, people who are going to educate you, people who are going to tell you the right thing. Now, if you just want to do it your own way, you'll do it your own way. We're going to support you. We're going to give you the best advice, but we want to educate our clients, and we want them to be able to not just be a home buyer one time, as Tye, we just talked about, build it. And now you can buy your investment property, because this is a generational wealth tool if you utilize it that way. Correct. If you don't mistreat it or manipulate it, you have the opportunity. So Tye, I thank you for always being you.
Oh, well, thank you, because I try. I feel like I be a little much, but I'm very passionate about it. And I'm just going to say this. It's so much money out here, but people stop themselves from receiving it. Just do what is needed, and it will definitely have an easier path. So I always tell people, I'm like the master key. Credit is the master key to open the door, but everything else after that, which is what Katrina be needing, is what keeps you in the room and have you at the closing table. So it's a package deal.
I love it. So thank y'all for joining us again at the closing table. And I pray that you have heard something that has sparked your interest, or something that says, I need to learn a little bit more. If that is the case, in the comments, I want you just to drop the word credit. drop the word credit. We will follow up with you. Make sure you like, share, and subscribe this message, this channel, because we have more to come. So thank you so much for joining us at the closing table, and we look forward to seeing you next week. Peace out.